Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 12th of November. I'm Daniel Lam, your host for the podcast. I want to spend some time discussing gold today because gold has been underperforming other asset classes since the victory of Trump in the elections. Now, it is quite a statement to make, to put Trump alongside the expression of diffusing geopolitical risk. But this is one factor that has been driving gold prices since last week. Now, Trump pretty much outperformed across all metrics. The composition of Trump's votes was very much worth noting, i.e., many were citing that they voted for Trump because they disagree with the Democrats' handling of the conflict in the Middle East. Hence, the geopolitical premium that gold is commanding may fall, leading to pullback in gold prices. Now, technically, the MACD indicator is showing gold in a bearish crossover within the bullish territory. So in layman's terms, this is indicating a pullback in an uptrend. We believe gold is likely to approach the first support at 2,600, followed by possibly going to key support levels at 2,500 and ultimately at 2,400. Now, we've been noting that central bank demand is an important long-term factor. In a multipolar world, the central banks has been trying to diversify into gold from the US dollar, especially over the last few years. Now, given the strong rally in gold, however, some surveys were showing price elasticity, and that central banks' demand for gold would pick up again if gold retreats closer to around the 2,400 support level. Moreover, gold is negatively correlated to real interest rate, i.e. gold would go higher if real interest rates drop, and real interest rates would fall if we have any combinations of nominal yields pulling back or if inflation rises. Now, as we discussed in the podcast yesterday, we may have seen the peak in yields for now. And the fiscal policy of Trump may lead to expectations of the return of inflation down the line. So this gives a supportive environment for gold. So therefore, investors should embrace this short-term correction in gold and add to gold accordingly at the key support levels aforementioned. The medium to long-term story in gold remains intact in our view. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.